Well, let's take a closer look at those sales numbers. Joining us right now to do that is Scott Painter. He's the founder and CEO of TrueCar.com. TrueCar, by the way, compiles pricing information for consumers and dealers, and they partner with AAA, American Express, Bank of America, and really others to get their data. Last year, Painter, by the way, was a finalist for the Ernst & Young Entrepreneur of the Year Award. Scott, great to have you back on Street Smart. Good afternoon.
Thanks for having me.
So investors seem okay with these numbers, Scott. Should they be, in your view?
Well, one of the things we look at TrueCar is actual transaction data. So where Marianne was really pointing to a 13 million car sort of seasonally adjusted rate, that's a pretty aggressive number. If we look at the actual numbers based on what's selling right now in the market, we actually are a little bit less optimistic. It's about 11.6 million. Which is, I think, bad news for the industry in general. I do think that the silver lining is that the demand that we see in the marketplace is going to be pent-up demand. You pointed out earlier that clearly Toyota and Honda are being hurt by the supply issues, and so we're seeing some of the lowest sales numbers, for example, for Prius since 2004. The big winners in all of this are, of course, General Motors, Ford, and Hyundai. They have seen large increases. The Chevy Cruze, 28,000 vehicles, almost within range of outselling both Buick and Cadillac combined for the first time ever. So, I think at a very high level, the industry is very sensitive to macroeconomic factors. Gas prices have clearly come down, but not enough. Truck sales are starting to rebound slightly, but it's not enough to actually change demand away from compact cars. So compact cars are still strong, and clearly that's going to hurt Toyota and Honda.
Hey, Scott, you say truck sales are starting to rebound slightly. Our reporters are saying that truck sales weren't coming up as strongly as car sales. I'm wondering what that means for the automakers, right? Because they have much bigger margins on the trucks.
Well, it's interesting. If you would have rewound the clock about 3 years ago, clearly Ford, General Motors, and Chrysler were really unprepared when there was a big shift in consumer demand for higher mile per gallon vehicles. The automakers were really caught because they were really relying on trucks and SUVs for most of their high margin revenue. And so today, led by Ford, I think, you look at the car makers, they're in a much different position. They're making much more of their profit on the compact segment in general. They're much less sensitive to that kind of reaction. Truck sales were up about 7%, whereas compact cars, for example, up 21 to 24% at Ford and at GM. So you're right in that truck sales are definitely lagging behind, but they're not falling, and that's really key. And I think that that's because gas prices have eased up a bit.
Scott, got about 30 seconds here for you. I mean, when you look at these numbers, who do you think is in the best position right now, is really kind of addressing the market in a smart way and really doing well?
You know, I really got to hand it to General Motors. The Chevy Cruze is just really selling very well. That is clearly the big takeaway winner. I think Toyota is actually poised for a big comeback. I think that they've got to get their supply issues back. In general, I think the industry gets a big well done in that incentives are at their lowest level since 2005, and that is really a very healthy indicator going forward. So I think that we're poised for a good end of year. I don't know if we get to 13 million cars, but definitely somewhere around 12.5 to 12.7.
GM stock, though, still having a tough time this year, so investors not completely convinced. Hey, Scott, thank you so much. Have a great holiday. We appreciate it.
You too.
Scott Painter, founder and CEO of TrueCar.com.